Let's take a look at some charts on Cardano from this week's cycle on Brave New Coin. So Cardano uses a proof of stake consensus mechanism now, as do a few other coins or coins that use proof of stake in general for some facet of their ecosystem. If we compare all those, you can see that ADA is up there in terms of market cap, daily transaction volume, and GitHub commits. It's kind of in the middle of the road of everything else. The takeaway from this graphic to me really is that there's a lot of proof of stake type coins. Each one of them will tell you that they are the best among their peers for various reasons. NEO and ADA and Tron are extremely centralized at the current moment. ADA has plans to transition over time towards decentralization, as did NEO many years ago. And here we are in 2020. And they still have something like 7 nodes, 5 of which are controlled by the NEO Foundation. NEM doesn't actually have staking anymore, I don't believe, but I just put it on here anyway. And ETH is going to be added to this list eventually, 2 years from now, when ETH 2.0 is fully rolled out, but the first phases of ETH 2.0 will be released in what looks like potentially December. If we look at all the staking coins and the value being staked on each of them, ADA is second to DOT. It's in the mix with EOS, Tezos, Atom, Algo. Don't know what AVAX is, that must be a new one. Tron, Band, NEM, Dash, Waves, all those are all up there. SNX, something like 55% of the network is currently being staked. If we look at some on-chain stats, transactions per day rose from January to July, and then since July have decreased by about 50%. Not necessarily something you want to see if you're bullish. In general, these on-chain stats will echo the price, so it's no surprise that price has fallen off pretty dramatically. For the most part, the on-chain stats reflect speculation. So if on-chain stats are waning, typically speculation is waning, typically price is declining. And average transaction values are kind of just flat. No big changes over the past few years. But if you want to get bullish again on ADA, I would look for an increase, a slow increase, a gradual, persistent increase in transactions per day. If we look at NVT and active addresses, again, monthly active addresses way down from highs. A lot of this was proof of stake transitioning or moving coins into proof of stake. Sort of takes all the dormant coins and gives them a job temporarily in the meantime, so the user has to move them. So in that sense, they are active. Now that that job for those coins, it isn't over, but you don't need to move them anymore, right? So it's no surprise that addresses have come off. NVT, inverse metric of economic utility, has continued to decline since the proof of stake transition. My guess is that much of this is related to the transition and not necessarily a bullish indicator for price. In general, if NVT is decreasing, that should be extremely bullish for price because it says the market cap has not priced in adequately the on-chain activity. And if we look at Google Trends, they perked up a little bit throughout mid-year, but overall still remain down towards 2-year lows. No surprise there as well. Google Trends follows price. Price follows Google Trends. So if on-chain stats and Google Trends are declining, price is likely declining with it. So we look at technicals. We have the 50 in the green, the 200 EMA in the red, yearly pivots VPVR volume, which has come off pretty dramatically since mid-year, and RSI. So no bullish or bearish divergences on RSI or volume. Price hasn't really made a higher high or higher low, lower high, lower low, none of that stuff. It's just been ranging here. The 50 and the 200 is at risk of crossing bearish over the next couple days, really. Could be a week or two. If price does break this R1 pivot, it's probably going to retest 05. because that's where the next volume node is, sort of previous consolidation area. So it's not bearish yet, it's just not exactly bullish, it's more neutral than anything. It's still above 08, but there's really nothing exciting here from a technical perspective that I can point to. Any increase in volume here beyond this downtrend should tell the story as far as the future. If there's a massive spike in buy volume, that likely says there's a new invigorated bullish trend, but if it breaks the R1 yearly pivot here on selling volume, it's probably going to 05 on that next support area. Look at the cloud. It's below the cloud, so it's definitely bearish on the litmus test. The TK cross is bullish, this blue-red cross here, so it's not as bearish as it could be. So there is some hope here. If this gets back above the cloud, that's your bullish re-entry signal, much as it was here. Bullish Kuma breakout and bearish TK cross back into the cloud. So there's the long trade. That's what you're waiting for here. Thus far, there hasn't really been a very good short trade or short setup. But if this TK cross flips bearish below the cloud, then you're headed for short territory. So it's a bit of a wait and see here on the cloud, which is honestly what I prefer. I hate pulling up a chart, seeing that I'm like mid-trend, that I missed the entries, right? This is the best time to watch this because you can watch for the bullish Kumo breakout, you can watch for the bearish TK cross below cloud, and then you can make your decisions and entries from there. And lastly, if we look at Cardano Btc, man, it looks rough. Not going to deny that. No bull divs here to speak of to suggest waning bearish momentum. You could argue a volume divergence because there's a lower low here on less volume, but this looks like it wants to revisit this multi-month consolidation zone on VPVR here. Really, that's all I use VPVR for, just to show where price consolidated, because you can see it pretty clearly. You know, obviously there's going to be support at around 400, 500 sats, some support at 650, and then tons of resistance at 1000 sats. Below the 200, the TK lines are bearish and close together, so there isn't really a risk of mean reversion per se just yet. Ideally, what you want to see here is a lower low in price with the bullish divergence on RSI and some sort of TKC clamp thing to show that this is ready for mean reversion. It's oversold enough that bears are exhausted. Because right now it looks like it tried to mean revert, failed, and just got denied fairly significantly. So overall, not too much to be bullish on here from a metrics or technicals perspective. Bit of a wait and see on the USD pair, but the BTC pair, it doesn't look like Cardano's set to outperform BTC anytime soon.